Mortgage rates have risen to their highest level in over a year, causing demand to drop below year-ago levels with rates now over 6%. This shocking shift is set to impact over $1.4 trillion in mortgage debt. This video is designed to help first-time home buyers understand the current mortgage landscape. You will learn how to navigate the high-rate market, the impact of rising interest rates on your loan, strategies for securing the best mortgage deal, and how to make the most of current market conditions. Additionally, you'll gain insights into the broader housing market trends. What is a mortgage rate? A mortgage rate, also known as an interest rate, is the percentage of your loan amount that you pay as interest over the life of the loan. For example, if you borrow $200,000 at a 6% interest rate, you'll pay $12,000 in interest over the first year alone, assuming a 30-year loan term. How do rising interest rates affect home buying? Rising interest rates make borrowing more expensive, which can lead to lower demand for homes. With rates over 6%, a $200,000 mortgage could cost you around $1,194 per month, compared to $955 per month at a 4% rate. This $239 difference can significantly impact your budget. What's the impact on loan demand and the housing market? Higher mortgage rates have led to a decrease in loan demand, with applications down by 10% compared to last year. The housing market is also feeling the effects, with sales dropping by 5% in the last quarter. This slowdown could lead to a more buyer-friendly market, with sellers needing to adjust their prices. How can first-time home buyers navigate this market? First-time home buyers can navigate this market by considering factors such as mortgage insurance, loan terms, and interest rates. For example, a 15-year loan term may offer a lower interest rate than a 30-year term, but with higher monthly payments. It's essential to weigh these options carefully and consider working with a financial advisor. What strategies can help secure the best mortgage deal? To secure the best mortgage deal, consider improving your credit score, which can help you qualify for lower interest rates. Additionally, shopping around for different lenders and comparing their rates can save you thousands of dollars over the life of the loan. Some lenders may offer mortgage rate updates or promotions, so it's crucial to stay informed. Key takeaways and next steps. In conclusion, the current mortgage rate update is a critical factor for first-time home buyers to consider. By understanding how mortgage rates work, the impact of rising interest rates, and strategies for navigating the high-rate market, you can make informed decisions. Remember, staying up to date with the latest mortgage news and rate hikes is essential for securing the best deal. Don't miss out on our next video, where we'll dive into the top 5 mistakes first-time home buyers make when applying for a mortgage. Click the link in our description to subscribe and stay ahead of the game.